Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what companies are really saying. Today we're diving into a report from Aircastle Limited, a company that buys and leases airplanes. Sounds pretty straightforward, right? Well, let's see if they're soaring high or just stuck on the runway. It seems like they just took out a big loan, but what does that mean for them? Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. This report is called an 8K. Companies file these when big things happen that investors should know about right away. Think of it as corporate breaking news. This one was filed because Aircastle made a big financial move. The big news here is that Aircastle's subsidiary, Aircastle Advisor LLC, got a new loan. It's a credit agreement for a 5-year loan. Basically, they borrowed a lot of money to help run their business. The loan is for $600 million, but it could go up to $700 million within the first year. That's a lot of money. Several banks are involved, including MUFG Bank and Sumitomo Mitsui Trust Bank. These banks are helping to organize and provide the loan. The loan has an interest rate of Term SOFR plus 140%. Term SOFR is a benchmark interest rate, like a standard rate that banks use. The 1.40% is added on top, meaning that is how much extra Aircastle will pay in addition to Term SOFR. So the actual cost to Aircastle will change depending on how Term SOFR fluctuates. This credit agreement has some rules or covenants. There are affirmative and negative covenants. Affirmative Aircastle must do, like providing financial statements. Negative covenants are things Aircastle must do, like providing financial statements. Negative covenants are things they can't do, like taking on too much more debt. These rules protect the banks that are lending the money. These are fairly common rules in loans of this size, this type of agreement. The agreement also lists events that would cause Aircastle to be in default, meaning they broke the terms of the loan. This would happen if they don't pay on time, break promises they made, or go bankrupt. If Aircastle defaults, the banks could take action like demanding immediate payment. If you really want to see every detail, the credit agreement itself is included as an exhibit to this report. It's a legal document, so it's not exactly light reading. This is qualified in its entirety, means that there are more details and specifics within the credit agreement itself. This part just says that the details from the first section about the loan are included here as well. Finally, this section lists the exhibits included with the report. The main one is the credit agreement we talked about to now. Let's step back and look at what this all means. Aircastle is taking on a significant amount of debt. This could be a good thing if they use the money wisely to expand their business and increase profits. However, it also adds risk. If they can't manage the debt, they could face financial problems. The interest rate is also something to watch. If interest rates rise, Aircastle's borrowing costs will go up, which could squeeze their profits. The covenants in the loan agreement are also important. They restrict what Aircastle can do, which could limit their flexibility to respond to changing market conditions. Overall, this loan is a big move for Aircastle. It could help them grow, but it also adds risk. Investors should keep an eye on how the company manages this debt and how it affects their financial performance. Alright, that's our breakdown of Aircastle's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.